Okay, everybody, it's me, Gregory Mannarino. It is Wednesday, May 18th, 2022. Glad you're here. Let's sit back and relax a moment and put this freak show together. So what's going on right now in the markets is kind of interesting, but I think it's something we anticipated. What am I talking about? I explained to you that we needed a few things to fall into place with regard to this market to make another move higher. I said we needed a rally follow through on Monday, which we did not get, but we didn't lose anything. Well, the NASDAQ fell under some pressure. We had a nice rally yesterday. I also said the market now needs to give back a little, okay? Can't give back all the gains we just made. With that said, stock futures are lower. In other words, right now, it appears that this market is going to open lower when the bell goes off. However, let us look at a couple of the other dynamics that are going on. The 10-year yield, again, remains a shade below 3%. That's good for the market in this environment. Crude oil continues to get bid up. WTI over $114 a barrel. Okay, market likes that. The slight fly in the ointment for today is the comparative strength of the dollar, or the Dixie, DXY. It is now slightly stronger. So what we have this morning, stock futures are lower. We got 10-year yield looking nice for this market. Crude oil getting bid up. Market loves that. Dollar right now, okay, whatever, is the fly in the ointment. But it appears that this market, despite the fact that we are going to open lower, could actually either put on gains today or come off of that low. And that would be a decent setup for the market. Remember, we just can't give back the gains we put on Friday and yesterday. That would be a bearish sign for the market. Anyway, that's where we stand this morning. Let us move forward. Gold and silver are under some pressure right now. Cryptocurrencies are under some pressure right now. We got some more really bad economic news, and I want to read this to you. So demand for new homes is falling, and mortgage demand, listen to this, week over week has fallen 12%. Understand what's happening, people. We have a hyper bubble, well, an environment with multiple bubbles, okay? Some are inverse. I'm referring to precious metals here. We have inverse bubbles here, and we have all kinds of distortions in this market here. And with regard to real estate and its surging prices and this kind of phenomenon that we're seeing, again, demand falling, meanwhile, prices continue to surge. This is directly the Federal Reserve. They have been supplying this market with artificial demand for mortgages for many years right now. And this has inflated real estate prices, has caused people's rents to soar. But again, is anyone pointing their finger over at the Federal Reserve, retard presidents, or anyone else? No. It's all kinds of other issues. It has nothing to do with the Federal Reserve. Can't make this stuff up if you try to, people. But that's the current environment we are in. And a lot of this is obviously the absolute value or the purchasing power of the dollar, which is evaporating. People still don't understand what they're looking at. People could write to me every day without fail. Greg, what are you talking about? The dollar is so strong. Look at the dollar. Look at the dollar index. People, I'm going to say this for the last time. Okay, you're looking at the relative strength, and I've been using the word comparative so people can maybe understand a little bit more, but they're not getting it. I don't understand why, all right? But we're talking about the dollar in relationship to other currencies. That's what we're talking about. Yes, this should be no surprise to anyone that follows this blog. I've told you from a long time ago that the comparative strength, relative strength of the dollar would remain high. We're in a race to the bottom. Central banks are doing this deliberately. They are killing their currencies by design. People, unless you really don't understand what's going on, we're moving very rapidly into a completely new system. And that's why central banks are doing this to their currencies, okay? It's a whole new set of rules. As I told you, it's already here, and a whole new environment is developing, and it's all leading towards this climax that I've been telling you is coming. A complete meltdown in the debt market beyond anyone's wildest dreams. That is going to happen. And that's going to destroy the stock market, and cash is just going to move from one set of assets into another. This is why, in my view, I've been screaming from rooftops for a long time now. You need exposure to commodities. You need to hold physical gold and physical silver, and yes, in my opinion, still cryptocurrencies, because I believe, and I could be wrong on this, I'm just telling you what I believe is the most likely scenario to happen when cash starts leaving the debt market in mass, putting pressure on the stock market. So this cash is just going to move into other assets, and that is, again, commodities, all of them, okay? Suppressed assets, gold, silver, I think platinum, palladium as well, and I think the market cap of cryptos is going to balloon. That's my take on it. You are certainly entitled to yours. I don't know everything. I'm just giving you my best take on this. If you think about it logically, where is cash going to go once it leaves the debt market, and puts pressure on the stock market, and cash bleeds out of there? Is it really just going to go to money heaven? Is it going to grow little money wings and fly away? Or is it just going to go into other assets? And that's what I believe is going to happen. Just a tsunami of cash moving from here to there. That's it. And if you are in the right spots here, even if I'm wrong with regard to cryptocurrencies, okay, you still need physical silver, gold, exposure to commodities via an exchange traded fund. PDBC has been doing phenomenal since I made that call. There are other exchange traded funds. Just open up a search engine and find one that's right for you. Like I said, I just threw that one out there, but there are other ways to capitalize on this movement of cash that is eventually going to happen. And it's happening now. We're seeing commodity prices skyrocket. Energy is out of control. And, and if you want to, if you're so inclined, you need to be an oil and gas producers here. They've freaking gone crazy. ExxonMobil, CVX, DVN. As most of you know here, I pulled profits out of ExxonMobil. I pulled profits out of Chevron, CVX, and I put it all into DVN, or Devon. That doesn't mean you have to. I still believe that ExxonMobil and Chevron are good plays here. I just wanted to consolidate my positions. I had too many open. So just to kind of keep track of things. And plus DVN pays a huge dividend, and I like that too. All right, so in summary here, more abysmal economic news. I'm not even going to go over it again. It's not going to stop. We have an economy in collapse globally. It's not just a phenomenon here in the United States or China. This is a global phenomenon. This is central banks. They are in the process of crashing the economy so they can buy it all, so they can be the lenders and buyers of last resort. And there's still going to be this tremendous disconnect between the stock market and the economy. The economy's over. It's dead and buried. People don't want to realize that. And of course, the propaganda ministries are going to continue to tell you how great we are, how strong we are, our retard president and all these other imbeciles here. We're great, rah, rah, rah. How do you feel? You really think it's that great? People, yesterday, the mainstream media, they're saying people are hurting. Duh! Like we already know, because of this massively out of control inflationary environment. And it's not going to stop. This is going to get worse. Just count on it. And I want you to be ready for it. And I think you are. If you follow this blog here, look, I'm not right all the time, but look at my calls. Look at the calls I made at the end of last year. Like I said, please check my videos. I said inflation was going to surge out of control this year. I said we were going to see extreme volatility in the stock market. I said we were going to see extreme volatility in cryptocurrencies. I mean, honestly, I look back on some of my work and I go, wow, it really is here. So trust me when I'm telling you that this environment you're in, it's designed to crush you if you're a member of the middle class. Even if you're a member of the upper class people who have all kinds of cash, they're still feeling the pinch, but it doesn't hurt as much. These people don't live paycheck to paycheck or wondering how they're going to pay this bill or that bill. It doesn't really faze them as much. This is an attack. It's a direct attack on the middle class. For years and years and years, I've tried to put this in kind of a dramatic state. I've said you have a tattoo of a target on your face. I've said that. Go back and look at my videos from years ago. I said, if you're a member of the middle class, you have a tattoo of a target on your face. I mean, it's the truth. All this stuff is unfolding, and that tattoo on your face, it's still there. It's probably getting re-tattooed on now. It's a very, very bad environment for people, and it's not by accident. Where is the revolt? Where are the people in the streets? Nowhere. This is the boiling frog syndrome. They're letting themselves be erased. Imagine that. It's so sick to me. It's so sick. All right, look, I'm out of here. Please share the video. I want to hear from you. Comment, and I'll see you at the end of the day. Let's see this market. I mean, like I said, stock futures lower, but the setup isn't so bad. So I don't know about you, but it's going to be an interesting day to me. And I may, in fact, add to some of my positions today. So you want to know what these are? First of all, my most recent stock picks are right on my website, traderschoice.net. Okay, take advantage of that. If you do subscribe to my newsletter, and ask anyone who subscribes to my newsletter, I shoot out, okay, guys, I bought more shares of this. I bought more shares of that. So subscribe to my newsletter. There's a link in the description of this video. It's literally free, okay? So take advantage of it. I'm out of here. See you later.